Eric Muathe, Muathe.com. Let's take a look at some stocks that are moving today. Today being July 27th, 2017. And we begin here with DKS, which is down about 5%. Take a look at FL, which is down about 5%. And then take a look at HIBB, which is down about 30 to 32% down for the day alone. Now I want to show you some similarities to some of these charts prior to their drop. And if we take a look at Friday's close, today being a Monday, we can see that as of Friday, the close, DKS was trading with its weekly RSI below 30.9. So it was already in bearish territory. Bad things tend to happen when a stock is trading below 30.9 on its big time frame. For example, on the weekly and the monthly, whenever you see the RSI below 30.9, it tends to invite some bearish type of a move the longer it stays below that number. So here we can see DKS, even before today's drop, was already trading below 30.9 on its weekly chart. Take a look at FL. As of Friday's close, it was trading well below 30.9 on its weekly chart. So the RSI was already bearish. And we can take a look at HIBB, which has spent some couple of months below 30.9, and as of Friday was trading well below 30.9, which might explain why it has invited another episode of downside action. So the key here is to always avoid stocks whose monthly or weekly RSI are trading below 30.9, because that tends to be a very bearish territory. Bad things tend to happen. Now if we take a look at the current weekly chart, we can see that this is still showing that this is dropping deeper below 30.9. So as long as they are below 30.9 on the weekly time frame, the stocks are going to continue to trade heavy. Yes, they might recover, but the only way they recover would be similar to this period here, where ultimately you move out of that bearish territory. You have to recover above 30, back above 30.9 to at least begin some type of a recovery. So as long as the stock is stuck below 30.9 on either the monthly or weekly RSI especially, expect the stock to struggle. Now we can take a look at FL, and as of right now it continues trading below 30.9 as of today's drop. Take a look at HIBIT, and you can see also a gap down and a major drop. Between the three stocks that I mentioned here, you can see that it is the one that was trading with a more bearish looking chart, because it was trading below 30.9 at a much lower rate, and also had been below 30.9 much longer than the other two, hence the big drop. So always be on the lookout for this type of movement. Now let's flip this. What is the opposite of 30.9? It is 69.1. Let me show you two examples, and let's take a look at BZUN, and you can see as of today it is moving up another 4 to 5%, a good move there. And take a look at this great move today by SGMS, up about 27%. Now what do these two stocks have in common? Well, take a look at the monthly. You can see before today's move, the stocks were already trading above 30.9 even before today's move. In fact, SGMS has been above 69.1. Whoops. So they've been above 69.1. So scratch that. Above 69.1 ever since it moved above that level here at about, let's call it February, March of this year. And now we can see this explosive move. Why? Because it has spent some time above this threshold. Let's take a look at the other stock, which is BZUN, which has been trading above 30.9 over the last 1-2 months. And again, we can see today following through with the strength by continuing to tack on another 4 to 5% gain. Why? Because the RSI is holding above 69.1, which is bullish territory, which tends to invite very good action and impressive price action as long as the RSI is holding above 69.1 on the big time frames of the monthly and the weekly. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. E-A-C-S.